Now, would I say as a new investor, take your 100 Rand and buy shares on EasyEquities, or take your 100 Rand and buy shares on EasyProperties? Okay. Welcome back to Chat with Tessa, everyone. Today we're having another financial chat. So let's get right into it. And before we do, thank you so much for being a subscriber on Chat with Tessa. If you aren't already a subscriber, please click below and subscribe. I appreciate the likes and the comments that you guys leave, so please do leave one today too as well. All right, so EasyEquities and EasyProperties. Okay, I have already invested in both EasyEquities and EasyProperties, and if there's one thing I want new investors to understand, I'm still new. I know I've been doing this for over a year now, starting to understand things and feeling like, we are mini experts. I'm just joking. Guys, I'm not an expert. I'm just getting, I've warmed up to a lot of investing because I spend a lot of time reading about investing, listening to podcasts and all of that, right? So I try and draw back and find ways to explain things in a more simplified manner for the Chat with Tessa viewers, right? So if you want to invest in EasyProperties, and then you also want to invest in EasyEquities, or you've invested in one but not the other, and you're kind of like, okay, I'm not sure what to expect on the EasyProperties side of things, right? So when I started with EasyEquities, right? And I got the feel of the up and up immediately. And it was exciting and scary, obviously. But exciting when I was seeing the money grow, 20% growth, 30%, 100%, 200% growth. Woo! It was really, really exciting. And I was like, I'm liking this. So putting more money into EasyEquities and buying more shares of different companies, right? And then when EasyProperties came out, I was like, there's an IPO, initial public offering. Okay, raising money to buy this property. I'm in. Put 10K in there, right? I got really excited. And then I waited. And waited. And waited. But I expected that wait. The reason I expected it is because I did do some reading before investing about the fact that this was a long-term game. But you're like, okay, long-term, but I'm expecting to see some activity on the platform the same way I see activity on the platform on EasyEquities. So manje, I'm waiting and nothing yet. Okay, fine. The IPO closes and now the money's been made to buy this property. Still waiting. Okay. No, now I see her. Okay, it's on EasyProperties. When I log on, it's there. Now go live. Okay, sharp. Why isn't the graph doing anything? How I see things on EasyEquities. Why is that not happening here? Gwenzagalani. Okay. Sometimes I log on to EasyProperties and I see a balance up there, and I'm like, okay, where does this money come from? Apuma masheleni. I'm kidding. And then I was like, oh, it's dividends. Oh, okay, dividends. Okay. And then I'm seeing this other value here, unrealized capital gains, unrealized gains, something like that. Here's a picture. I'm like, okay, can I take this money out? No. Why? Unrealized islungu tisa. How? I'm being so silly. But I'm just literally taking you through what I was thinking and feeling. And then, okay, when I got to grips with it, I understood that, okay, EasyEquities, where I buy shares of different companies and invest in them in the stock market on the JSE, right? Where literally the price can change any second and it can be growth nicely, and then kuyehle and growth nicely, kuyehle futhi. I was like, okay, so on EasyProperties, it's not the same thing. So they've bought this property, and over time, this property in this particular location might grow in value, right? So they buy it today for 4 million, for example, and maybe 5 years from now, it might be worth maybe 6 million, okay? Due to factors around that area regarding property and other factors that could influence the price of properties in that area going up and there being a demand. So that's why we're seeing these unrealized values there. Like, okay, so when they evaluate the property every 6 months or so, they get a sense of, did it appreciate in value or not? Now, okay, when will I get this unrealized money? Oh, after 5 years or 7 years, when they decide to sell off the property, and we as the investors make the decision of whether we're selling or keeping, or whatever the options are at the end of 5 years. If it so happens that from the evaluation over time, that figure has remained that amount or gone higher, you might get that amount based on your shares, how many shares you had or invested in. Like, okay, but that figure could still change, right? Yes, there are factors that could influence that, which is then where we can say risk has been taken, right? Okay, but then what about this balance now that I sometimes see? Sometimes I'm seeing, hey, 100 rand, 50 rand, something like that. Oh, those are dividends. Okay, Malia Mahala. Not really, because it's just profits being shared with you. So we raised this money to buy this property, right? I put in my 10,000 bucks. Fine, it got me those shares, right? Now there are people that stay there and they're paying rental money. Okay, I'm not the tenant. I mean, I'm not the landlord, so I'm not collecting this rent. So there's a company that's collecting this rent. There's a company that's managing this property. There's a company that's managing the tenants. There's a company that's managing the expenses. So after all of those expenses are calculated and finalized, now the remainder or the dividend that comes out of that is actually from that rental money. And how it's calculated is based on how many shares you have. So some people are asking me, also I thought the same thing. Okay, so if I have 1 share, that means that I'm gonna get 1 rand as a dividend. Is that how it works? So then that means if I have 100 shares, my dividends are gonna be 100 rand, and so forth and so forth. You know, if that's how it worked, I would want to be in that investment. Woo! Investment would be heaven. Yeah! I know, it would be so nice. But that's not how it works, right? Dividends are calculated in cents, as they've also said on their website, and there was an example that was given. For example, this I got from their website, and you can do your own calculations. You can actually look at the dividend payout history that they've had for the different properties, and you can sort of do your own calculations to get a better sense of how much you would have gotten in dividends, right? So Nantige, if there was a 2.3 cents, 2.3 cents, not rands, dividend that was declared, right? And you have 100 shares, take 2.3 cents times by 100, and then you will get 230 cents. What's 230 cents? That's 2 rand 30, right? So 230 cents divided by 100, it will give you how much it is in rands, right? So it's 2 rand 30. Okay, Fine. So if you now invested maybe like less than 100 shares, maybe you bought 1 or 2 shares, some people have been saying that, well, you can invest on EasyProperties with as little as 100 rand, which is, yes, very true, right? Now, when a dividend of 2.3 cents is declared, you would only be getting 2.30 rand, right? Versus somebody else who maybe has 1,000 shares there. Now, would I say, as a new investor, take your 100 rand and buy shares on EasyEquities, or take your 100 rand and buy shares on EasyProperties? I would say that starting on EasyEquities as a new investor is a great way for you to get a feel of how investing works, right? For you to understand the highs and the lows of investing in shares on the stock market, right? And there's a great opportunity for your 100 rand to buy you those what they call penny shares, right? Those nice cheap shares. For example, my favorite Purple Group so far, which is still below 3 rand. It's like 2 rand something a share, right? You buy that and then you see your money grow. You're like, oh, this is getting exciting. I want to invest more. But if you took your 100 rand and you took it to EasyProperties, and EasyProperties is that long-term game of like 5 years, 7 years for your money to grow, depending on how the property grows in terms of its value. And yes, you'll be getting that dividend that you're going to be getting when they declare a dividend from the rental income that they make. But you're only getting that quarterly. That's every 3 months, right? And the development or the growth in value of that property is something that you might only realize that capital, not might, but you'll realize it like later, 5 years. When I say realize, I mean like actually have that money. But now on EasyEquities, now is the new investor who's still trying things out. You're active. You're seeing this every day. Pala, as a new investor, you want to log on every day and see, oh, what's happening with my investment? What's happening with my investment? And it's exciting and scary and all those nice things until you get to understand it, right? But then you won't have that same feel when you log on to EasyProperties and you invested your $100 there. So I would say start on EasyEquities, right? Get the feel of investing going, right? And then also diversify your investment portfolio by also investing in property. And then maybe you can take your next 100 and invest in that next IPO that EasyProperties will have. Or you can actually buy some shares during an auction, which is actually another way for you to make money on EasyProperties, is that if you bought these shares for 1 rand a share, maybe during an auction, you might get the opportunity to sell those shares for a higher amount. But a higher amount is not like now you're going to be able to sell them for 2 rand, now you're going to be able to sell them for 5 rand. No. Maybe 1 rand 30. 1 rand 20, but all calculated also in cents, but not that much per se yet. Okay, so I hope you guys understand that differentiation with regards to EasyEquities and EasyProperties. And about the dividends, they have a whole dividend calendar that can show you that this is when you can expect dividends to be paid out. This is when you can expect for the first dividend to be paid out. This is also more or less how long it takes for the first dividend to be paid out. So yes, the people that have a lot more money and were able to put it into EasyProperties, yes, those people are definitely getting a higher dividend, and maybe they can use those dividends to cater for their living expenses or invest in something else. Yes, you'll also have your dividend, of which I have mine, and I recently got a dividend of 200 and something. I think it was 2 different properties that paid out a dividend. And I took that money, and what I did is I invested it in one of my favorite companies to invest in right now, which is Purple Group. So I took that 240 and I bought more Purple Group shares. I just did an inter-account transfer, and that was great. That worked for me, right? that's one of the things that you can actually do with your dividends that come in from EasyProperties. Instead of sending that money into your bank account, you can just send it over to your EasyEquities account and maybe buy some shares there. The thing is, you cannot reinvest dividends automatically on EasyProperties, right? Because remember, they raise money for a particular property. After they get that money, the property is bought, right? You have those shares. Now, when a dividend is paid out, where are you going to reinvest the money to, right? What you can do is maybe when another IPO comes out, you can use that dividend to invest in that IPO, which is what I did actually with one of my dividends. And I haven't gotten a dividend yet from that property investment. I think we might expect to get one next year around May, which is a pretty long wait, right? I invested like last month or 2 months ago, and I'm only gonna get the first dividend like next May. So there hasn't been much movement and activity. Whereas if I put that $100 into buying shares on EasyEquities, I would have had that activity and seeing that growth or the falls that happen, and I'll be like, oh snap, when will it be in the green? My investment is in the red. Let me check again tomorrow. But with EasyProperties, even if I check again tomorrow, it's going to be the same. Okay, so understand these two different investment platforms and understand what you get from each one. Each one of them grows your money in different ways at a different rate, a different time. Okay, I hope you guys understand that. But thank you so much for tuning in to chat with Tessa. I can't wait to see you on the other side on Financial Chats _ Tessa. Remember, share this information with your friends, your family, your colleagues, acquaintances. Those people are your community, all right? Enrich your community, teach your community, empower your community, okay? Thank you, Nakansa. Goodbye.